The second candlestick here, let me show you. Go smaller time frame. If you go to smaller time frame to enter your trades, you see the market went up, come back for the retest, and there by the retest, that is where you take the buys. Let's stop losses. Our market, the price won't reach your stop loss. Look at that. You enter here on the retest, your stop loss is there. Your retesting candlestick, we had a retesting candlestick. We had a retesting. You see, we went up, we had the retest on the line. Then this was our entry. This was our beautiful entry. This is our beautiful entry. I'm gonna call it entry. That is it. That is it. Like, that is it. Maybe my market so don't panic. Don't panic. Just mark your order blocks. Just mark your order blocks only. Don't panic. If the market is reversing back, don't panic. Mark your order blocks. Keep holding. You understand? Keep holding like that. You understand? When you mark your order block, look at this entry again right over here. You don't panic. You understand? As long as you know our touches from 4-hour time frame, anything is smaller time frame it follow the bigger time frame. The smaller time frame always follow the bigger time frames. Then do you mind to show us your confirmation when the price reaches your zone? Yeah, I just showed you now. That is how you do it. That is how you do it. Where's my music? Oh, I've been talking here without the music. So that's how I showed you. That's how you do it. So your second candlestick, it's your retest and your entry. It's your retest and your entry. Yeah, I analyze gold only. It's good. The reason why I love gold is it respects these two strategies, demand and supply and SMC. That's the reason why I stick on gold. You understand? It whips your Namara. Once you make like the proper analysis, it's not gonna whip you. You understand? It whips you on. So that is it, guys. So my battery is low. You know, it's on like 20% now. And SMC smart money concept is fair value gap not needed in this strategy. Okay, now good question. Now fair value gap, it's needed on this one. Let me even use this what do you call? Let me use this chart here called fair value gap. It's needed on this method now. Let me use 2-hour time frame. I'll show you the difference now. Fair value gap is needed on this Hman. I pick it on Salino. Okay, fair value gap is needed on this one, on this method. When you mark the break of structure, the candlestick that breaks the structure, it has a fair value gap that needs to be filled. So it has a fair value gap, like one. So another example again. Let me go 30 minutes time frame. So even here, you see, there's a break of structure. The candlestick that break the structure here is in a fair value gap. It in a fair value gap, like one. So Kimo strategy saying this is the strategy. Says I break of structure and you look for the demand zone from the bottom. Seki sona so open favorable. The candlestick that breaks the structure in a fair value gap. In a fair value gap. Why do you have your lives? I like how you explain the market. Like I know, like I just go live. Like you know, information important to people. I will just go live. You know, like guys, let's talk about the market. I want you, when you go back home, you practice what I showed you and I've proved to you. And once you can do it, you can just like collect testimonies, but I don't post them on TikTok or online. People, they can be like, hey man, I took pies, I took these, I made this, how much from, they send me a lot of messages, but I don't post them, you understand? So this is the strategy that looks for, you look for fair value gap. I want a candlestick on air from fair value gap, a strong fair value gap. So, but now when it comes to this one, more fair value gap are need. Here fair value gap, we don't need it. We only need two candlesticks. We need the candlestick of a demand and we need the impulsive move. This one, just this one only, because there is no break of structure or nothing. Those are the two candlesticks. The only thing we're concerned about is the impulsive move here. That is the concern. We are concerned about the impulsive move. Then this becomes our demand zone. So in the price comes to the demand zone, it buys. You see, it came back for the second time. So clearly, obvious, gold you buy like a Monday. Obvious. If you buy for the first time, it's gonna buy for the second time. So it means a Monday value, we're looking for buys on gold. And already, let's now wait. The result. Because 15 minutes already revealed retest more. So it means a gold ibula ka 12 or can namela buy already revealed retest mo ka 15 minutes na tshantse ke nametse buy na neki staying mo una kontsantsa ni market ka free time na ke ba bela ke lino la ka le ba thata ke tlholeng thing. So more ki buy tse ding re really retest mo ya di buy aga ra bona ke demand zone in it's right here. So wa bona le impulsive move or revealing lona mo 15 minutes. It means the last candlestick right here, it's our order block or our demand zone. So market what we mitigate that. We'll show it flames, guys. So my phone is battery low, guys. I don't have a main to. I don't have a main to. I've been trading for 4 years. I don't have a main to. I don't have a main to. That's where, if you want me to teach you all one, it's fine. It's fine. I can teach you all one. Because the la chaba, lenaka lizi la chaba karamutare as a nyoko trainer. Atenyaga alwa, or maybe your 1,000 rands, not $1,000. So I was finding out you don't wanna like maybe you're not going how it's fine. Just tell me, I'll make Now I'm a full-time Forex trader. So I'll teach you alone. Beast mode is the way, my G. Beast mode is the way. Beast mode is the way. It's the way. You know, beast mode is the way. It's the way. It can flip accounts. It can trade events. How much is $1,000? $1,000 is 17,000. $1,000 is 17K, my brother. 17K. It took you how many days to make 10K USD with this strategy? I don't trade with dollars. Trade with rands, bro. Trade with rands. Like, what do you Euro USD? I don't want to lie to you, but I've never tried using these on Euro USD. Oh yeah, maybe here this can work. So this can work. But I've never traded it with Euro USDs. I never analyzed more Euro USD. So but this won't work. This one it won't work, because the impulsive candlestick, it needs to be the second candlestick, not the third. I want go 1, 2, 3. It needs to be one impulsive move, just like that. So I've never used it Moody Euro USD, the so for me they don't move nicely. Like, I don't want to lie to you, for me they don't move nicely, these ones. So I don't normally you don't. So break of structure at the top there. Then this is what you can use. You can use normal SMC, but the demand and supply, I've never used it on body. So the body Nasdaq. So if I go to Nasdaq, I've never used demand and supply on Nasdaq. But I've never used it I've never. I won't. So, but I never used it on NAS. And another thing, you see, this is someone was gonna sell here. This candlestick, guys, it must be in the middle, in the middle. Maybe here, you see here, this is the nice one. This is a nice one. It's in the middle. It's surrounded by candlesticks. This side is surrounded by candlestick. This side another candlestick. That was the beautiful supply zone right over there. So it must be surrounded by candlesticks mostly. It must not be at the beginning or at the end. It must be exactly in the middle, just like here. This is it. But this one failed. This one failed. This one. But doesn't mean that the strategy is not working. It failed, and the only thing that you check is I never talked about it. I've never talked about when the price fails. When the price fails to mitigate. So when the price fails to mitigate, I've never talked about it. So if the price failed here, like it failed to buy at this level, what you do is you call this now a swap zone. I marked it here, you see. You call this now a swap zone. It's no longer a demand zone. It's called a swap zone. It's called a swap zone. Inbox me. It's called a swap zone. So but now the candlestick must close below. You understand? The candlestick, or when it's on 4-hour time frame, and the demand zone, we found it on 4-hour time frame. So if this fails, it means now the candlestick must close below. What you do is you wait for a retest. You wait for a retest. So when the market retests the level here, you sell there. Why one? You sell at that level. You sell on the market after the retest. So it's called a swap zone. A swap zone. So you wait. Even the candlestick must close below. If it doesn't close below, if it's a shadow that is below, we don't take it like that. So if it fails, we call it a swap. If it doesn't fail, it's still the demand zone or a supply zone. So that was a beautiful sell on Nasdaq. So, but if it fails, just like this one didn't fail, this one, right? But the price touched there and it's going up. So, but if it fails, it's called the swap zone. You swap it from demand to supply. Yeah, you swap it from demand to supply. So guys, let's do you see Nasdaq bearish next week? I'm not sure, my G, about that. Like, I'm not sure. We are coming from a demand zone. Right? We're coming from a demand zone and we are going up. And what I'm gonna be looking for is my maybe I can go to 2-hour time frame. Is my analysis like the demand zones? I must look for those demand zones, break of structures, like those kind of things. So I have to find them. If I don't see them, maybe we can look for reversal order blocks right there at the top. This is my reversal order block. But seeing Nasdaq being a bearish move, maybe we can just end on 1-hour time frame. Here we are on 1-hour time frame. Also on 1-hour time frame, there's nothing that I see. There's nothing that this one I cannot take it as a demand zone because it's there at the bottom. Let's try 30 minutes time frame. 30 minutes time frame, there's nothing that I see. Also nothing from here and here, also clean, like it's clean. 15 minutes time frame. 15 minutes time frame. Here's something on 15 minutes time frame. Impulsive move right exactly here. That can be my buying entry, because still it's going up. This thing is going, Nasdaq is going up. It has been buying from the bottom there. So on 15 minutes time frame, if there is no candlestick that is closing below this demand zone, it means I'm going to take the buys. That means my entries are going to be on 5 minutes. And when I come to 5 minutes, I see a very clean break of structure and a very clean order block at the bottom. Let me not disturb this one. I'll try. I see a very clean order block at the bottom. So it means I have to adjust my entries right on this order block here 5 minutes. So this one is my demand zone on 5 minutes. So that means I have to adjust it's perfect. The break of structure is also perfect. The impulsive move of the candlestick, the fair value gap right over there. Price needs to come and fill the gap right over there. So I'm waiting for the price to come. So I adjust my entries. I'm no longer taking the 1 yard 15 minutes. I'm no longer using the entry of 15 minutes because the entry of 15 minutes is here. So I'm using the entry 5 minutes. It's at the bottom right over there. Then that becomes my 50%. Then we're gonna buy right there at the bottom. You see, So that is it. Everything confirmed. So I'm gonna use the only thing that I want to kohore. The only thing that I want is that there must be no 15 minutes candlestick that has to close below this. All of them, they have to touch here and close above. The second candlestick that is gonna come, we go to 5 minutes, we look for a retest, then we buy. Then that will be a beautiful buy. I'm telling you, that will be a very beautiful buy. It's gonna be a very beautiful buy on Monday. It's gonna be a very beautiful buy. Be a very beautiful buy.